Amazon is still staking its claim on AI. While AWS fell slightly short of analysts' net sales expectations, sales were up 12% on the year. For a deeper dive into Amazon's results, we're joined by Arun Sundaram, CFRA analyst. Arun, thanks so much for joining us again today. So let's dive right into Amazon's results. You saw the stock kind of flip-flop in terms of the reaction, and in the pre-market it had been higher. What do you make of its latest quarter?
Yeah, thanks for having me. Yeah, no, I think the story of this quarter is really that Amazon is turning to a highly profitable and free cash flow generating juggernaut. If you look at this quarter, operating profits hit $11.2 billion. That was well above the 7.7 billion estimate, and that's actually a over 300% increase from prior year, and about a 45% increase from Q2. And the best part is that there's still a lot more efficiencies left to be unlocked for Amazon over the next, I would say 3 to 5 years. On the e-commerce side, there's Amazon still finding ways to reduce its cost to serve while also trying to increase delivery speeds. So really a win-win there. We'll likely see more robotics, automation in its fulfillment centers. We have its electric vehicle fleet coming in over the next decade. In Prime Video, I think there's a lot of enhancements left to be made there to improve the profitability in Prime Video. In the international business, it's starting to break even now. So I think going into 2024, we can finally see positive operating income in the international side, which would be a huge positive. And then lastly, with AWS, this quarter, we actually saw a 600 basis point margin improvement from Q2 to Q3 in AWS. And I think that's going to continue growing as well. So really the story right now is on profits and free cash flow. And I think that's what's driving Amazon stock higher.
Arun, how quickly you just mentioned AWS there, the growth that we're starting to see. How quickly do you see that growth then accelerating when we look ahead to 2024?
So yeah, I think the slight disappointment this quarter was that with the fact that AWS growth was it was 12%. So it was also 12% in Q2. So we saw pretty much flat growth Q2 to Q3. Investors really wanted to see that business reaccelerate like Microsoft did. Microsoft saw a 1-point acceleration from Q2 to Q3. I think if AWS saw 13% growth this quarter, the stock would probably be up much higher. But during the earnings call, it was pretty upbeat. Andy Jassy did say that AWS that they signed several new deals in September with an October effective date. So it seems like in Q4, so this upcoming quarter, we'll potentially see AWS growth accelerate from that 12% growth rate in Q3. So we could potentially see 13, 14% AWS growth in Q4.
I mean, there is some concern when you point to the growth that we're seeing or the growth that we have seen from AWS and comparing that to the numbers that we got out from Google earlier this week. Also, what we saw in Microsoft with its Azure business, whether or not we should be a little bit worried just about the risk there that the company is starting to lose more market share. What's your assessment of that risk?
Yeah, I know there's a lot of chatter about whether Microsoft is gaining more market share in the expense of Amazon. I think our conclusion is that it's way too early to tell. And it's really hard to tell because right now AWS is a much larger business than any other cloud provider. AWS is running at a $90 billion plus run rate right now, and it's growing 12%. So that's a massive business. Microsoft also has a big business, but not as big as AWS. And then if you go down the cloud providers, Google's cloud is much, much smaller. So you can't just look at just the year-over-year growth rates and determine whether one is gaining market share at the expense of others. All these new opportunities in generative AI and machine learning, we're still in the very early stages of that. So that's why, and right now it looks like all the deals that these companies are getting in generative AI, the deal volume is really lumpy quarter over quarter. So I don't think you can look at just one quarter and determine whether one company is gaining market share at the expense of others. This is going to be an opportunity over the next decade.
And Arun, let's hone back in on Amazon. You talked about efficiencies to be unlocked. What segments are you referring to when you say that?
Well, really, it's in the e-commerce side. The e-commerce business, wasn't profitable last year. Really hasn't been profitable for the past few years, and we're just starting to see that business become profitable. So it's been a few quarters now of positive operating income in that North America segment, which includes e-commerce, advertising, everything except AWS. And then one of the biggest reasons why we're seeing profit improvement there is that Amazon actually moved from a national fulfillment network to a regional fulfillment network. And by doing so, it's actually lowered its cost to serve because now you're shipping goods closer to the consumer, and it's also increasing its delivery speeds. So that's been a win-win there. And like I said before, I think there's Amazon's still very much in the early innings of improving efficiencies in its e-commerce business. I think over the next 3 to 5 years, we can see those e-commerce margins improve even more, especially as it rolls out more robotics and automation in its distribution and fulfillment centers, as it rolls out more electric vehicles in its fleet, as it finds ways to continue lowering its cost to serve. So I think there's still a lot of efficiencies left to be unlocked there. And then on the international side, like I said before, that business hasn't been profitable. And this quarter, operating profits in the international business was negative $95 million, which is a significant improvement from prior quarters, but it's still negative. And so the expectation is, as we go into 2024, that international business can start becoming profitable, especially as Amazon scales its presence in some of these emerging markets, which is still very much early in the whole e-commerce side. So we're positive on the whole operating profit, free cash flow story of Amazon. And I think that's what will drive Amazon's stock over the next year.
All right, Arun, always great to get your perspective, CFRA analyst. Again, Amazon shares moving to the upside here in the pre-market, up just about 6%.